What's going on, everybody? Sam Dillman here with Ideal Mortgage Group, sitting beside Ms.
Susan Wood. I'm a loan officer here with Ideal Mortgage Group and Lancaster, PA as well. We are here to talk about mistakes that buyers make early on, whether that's before they talk to us or right before they go under contract. So we were chatting a little bit earlier, and one of the things that we both see a lot is people either not getting pre-approved before they're shopping or making changes to their financial picture right before they wanted to get into the home buying process. So let's kind of touch on the changes to financial picture. What are some things that you have seen? Maybe buyers came to you and you were able to get them pre-approved. You went over what the pre-approval was going to look like. And when they're getting ready to make an offer on a place, you update that pre-approval and you can't qualify for them anymore.
Yeah, a lot of times, somebody will meet with a real estate agent or they'll contact us directly and say, hey, I'm thinking about buying a house. We'll go through the application process. And credit's good, income's good, debt's good. And then let's say 6 months later, they come back and say, hey, we're ready to roll. We found this house we really like. We want to put an offer on it. All right, well, your credit's expired. We got to repull it. So we repull credit and, well, they bought a new car.
And how often does credit expire?
Every 3 months.
Okay.
So depending upon the situation, it might be able to make that last and use it. Mm-hmm. But, if they come back to us 6 months, 12 months later, we have to repull credit and see where the debt's at and update the debt. So they might have bought a new car, even a worse scenario, tried to buy a new car and didn't qualify for it, but now they've got 15 inquiries in their credit report and their score dropped from 680 to 525. Mm-hmm. And now they don't qualify anymore.
Yeah, so they don't even have anything to show for it. They just were shopping and now you don't have a car.
Right. Or they did buy a car and now the payment's $1,200 a month for a new truck that they bought and they don't qualify because of the debt to income ratio.
Yeah, I have had applications I've taken with people and they're like, oh, do you have anything to warn me about? Any tips, as we go through this just to make sure we don't throw anything off? And I'm like, oh, well, just don't take on, don't go out and go take on a new monthly car payment of $1,000. I think you and I were talking about this, comfortable monthly payments. Don't go, get some crazy fancy car, $1,200 a month or something. And they're like, oh, well, I did. Do you see that one on my credit report that I did just get? And I'm like, when did you get it? Oh, 2 weeks ago. So it hasn't showed up on the report yet. They just have some inquiries. So they haven't showed up on the report because it hasn't had first statement cycle.
Right. And that's something else people should know is that, let's say we did just pull your credit report and then 2 weeks later you go and buy a car, we're going to get a notification of that. So if you're under agreement or you're just looking and we've already pulled your credit, but then 2 weeks, 3 weeks, a month later, you buy a new car, we get an update on that and then we have to update our data on what we have on you to show that new debt. So if you think you're going to pull one fast or think it's not going to matter, it does because we get those updates from the credit bureaus that say you had inquiries, then we have to justify what the inquiries were for. And if you took on any new debt. So, yeah.
What I've told clients too, I don't know about you, but I've had clients come to me and say, hey, we had our transmission go out or something. We need to buy a new car. We need to buy a new van, even if they're under contract. And they'll just say, what budget would I have for a monthly payment on a new car?
Right.
And what kind of leeway do I have in my credit score before my pre-approval or my contract would be effective?
Right.
And that's a really advantageous way to go about it because that allows us to know what's going on. It doesn't feel like we're prying by saying, oh, we got an inquiry. Did you get a car? Or did you get a new credit card?
Right.
Doesn't seem like we're spying on anybody, but we can also help you make sure you don't shoot yourself in the foot.
Well, my first question would be, can you go another 3 weeks without a car?
Mm-hmm. Mm-hmm.
Let's settle on the house and then go buy the car. And at that point,
I've had someone who asked within 7 days of closing, we're like, can you get a rental for the time being?
Yeah.
But people who are I don't know about you, but I've had some people who are very lax when they have their pre-approval, but then people who are so on top of it, but they haven't found a home yet. And we don't know if they're going to find a home in the next 3 months, 6 months. So with those people, it is a little bit easier to have that conversation and say, how about $300 a month, that'll be okay.
Yeah.
And sometimes you find maybe they already had a monthly payment and they'll get rid of that one. So it's really nice when people come back and they say, hey, I actually paid off some debt. I got rid of this and that. And we update it. And we're like, oh, look, you actually qualify for more or just a better payment. But it's sad for us when people come back and they think, oh, I found the perfect home. We already have a verbal agreement. We just need a pre-approval letter. We haven't talked to them in months. They didn't ask us for a cost sheet. They didn't reply to any outreach from us. And now they don't qualify because their financial pictures.
Yeah, it sucks. Those situations really suck, and it's hard to be in that position to have the conversation with them and their agent to say, hey, sorry, you can't make the offer. And then the agent's like, well, what do you mean? We were pre-approved a month ago. What changed? It's tough to have those conversations, but it happens. I'd say moving on, some other mistakes that buyers make in the process would be with their agents. You know, we just talked about this beforehand, going shopping, looking at houses, going to open houses without representation.
Yeah. And what do you mean by representation?
You need to have a real estate agent. If you have to pay for it, it's worth your money to go unrepresented, or to just walk into an open house and the agents that's there and they end up representing you. They're not going to have your best interest at hand.
I think we've talked about what is fiduciary responsibility.
Fiduciary responsibility.
Yes.
A real estate agent has fiduciary responsibility to their clients. So if you walk into an open house and there's an agent standing there and like, oh, hi, I'm Julie. Nice to meet you. Want to see the house? Do you have an agent? No, I would love to represent you. Don't do it. Don't do it. Because Julie's responsibility is that seller, not yours. So if you want to negotiate, if it comes to inspections and you want to negotiate, Julie's not going to have your best interest at hand. She's going to make you sign a piece of paper that says she doesn't represent you. She represents the seller. But guess what? When it comes time for payday, Julie's taking all the money. That's what Julie cares about. Sorry, agents, I love you all, but you know how it goes. You have that fiduciary responsibility. You can't represent both people at the same time.
Yeah, and I know it's not even legal in some states, but still is in PA.
In
that
PA,
you can.
it still is, yes.
Dual agency.
Yep.
Man, Sam's got something about Julie. Julie, however, can still represent you for other homes.
Exactly.
And
exactly.
be
yes.
your number one advocate. She can still do that for other homes.
That's a very good point to make.
But
just not for that home where she's also listing agent.
First come, first serve. If you're going to have someone who takes your priority for you, it's going to be the first person you sign a contract with.
And if you need somebody, let us know. We have hundreds of agents.
We have seen plenty of things on the back end.
Right.
Where if you work with one agent or the other, it can go very differently. This is why we may recommend a specific realtor, because it's not just personality fit in the area.
Right.
But I don't know about you, but I have had realtors, I can send a pre-approval that's almost identical to one set of clients with their realtor and another set of clients with their realtor. I've had one say, perfect, thanks, happy they were approved, turns around and they're under contract in 2 weeks. Another couple, similar, looking for the same thing, same pre-approval. Realtor says, well, it seems like based on their budget, they should just wait then, right? That's a shame. And we as loan officers, we shouldn't be saying, go work with another realtor. That person's not going to get it done for you. That's not professional. It's not really ethical. But we know in our heart of hearts who can get things done for you. And we want you to win. It's not about, we don't get kickbacks by you working with a realtor that we might recommend. It's sincerely because we like to get deals closed. We like when they're closed smoothly. We like you to get homes before you have buyer's fatigue.
Right. That's what's best for you. I mean, if you have an agent telling you that you can't afford a house and they have no idea what your financial response or your financial situation is, they have no clue. They shouldn't be saying that.
And some people it's the same. We talk about online lenders and local lenders, and not even all local lenders are created the same. Like, I don't know about you, but I've been able to help people be successful with the same pre-approval that somewhere else could have given. Yeah. But it's just about strategy. And I know that, like with our cash-backed offers and stuff like that, bridge loans, I know that you have also taken that strategy into play to get more people closed and into houses.
I had somebody reach out 2 weeks ago, and then she said she got this great rate from an online lender, sent me the cost sheet, wanted me to look at it. Somebody I dealt with in the past, she's looking to move up. She's having kids and whatnot. Aww. And she sent me the cost sheet. 5.75% for conventional loan. I was like, I got to see it.
Great rate, bad service.
No, they were charging her $16,000 in points.
What? This is why I tell people I don't want to just see the rate on the pre-approval. I want to see the cost sheet.
Right. They were going to charge her $16,000 in points on a $350,000 purchase to get that rate. And she saw the bottom line and she saw the payment she wanted, the rate she wanted, didn't look at the closing costs because she knows she's going to sell her current house and have a butt ton of money. And she was okay with it.
Yeah.
So walked her through it and said, listen, what if we can do 6% or 6 point, I think it was 6.25 for half of that, I think it's even less than half that. And your payment is only, $100 more a month.
Right.
But here's this much more money in your pocket. Like it just, they don't care. There's somebody on the other end of the phone. If you can get them even twice at the same time, I don't know. It is what it is.
Well,
I'm gonna stay off my soapbox.
5.75 to 6.25 sounds like a really huge jump, but I know that I do, so I can guarantee you do. Look at the cost breakdown, the cost benefit analysis. How long does it take for you to, that 0.5%, what were you saving on the mortgage versus that money you're putting in up front? How long is it going to take for you to recoup that?
Right.
And does that make sense for you? Also, would you maybe even be refinancing before then? Does it make sense for you to do that buy down?
Right.
I know with our personal situation, when we bought our home last March, closed like March 1st, we were upsizing. I had people buying down their rates left and right. Like, let me put the maximum amount of points. I won't even bring that up with online lenders. I've seen them charge on the rate sheets, 5 points. And it's like, you're actually not going to be able to lock that. So we should look at what's feasible for you.
Well, that's the conversations. And that's where I feel like we've gotten off track of mistakes buyers make. But we're doing other things. Mistakes buyers make. Choosing an online lender.
Yeah, choosing an online lender. So have you ever seen, because I have seen it a lot, especially recently, I'll get a call sheet from an online lender and these buyers are like so jazzed up, hey, can you at least match the rate? But then I see it's a primary residence, conventional, 5% down, and the lender's charging them 5 or 6 points. We can't generally charge more than 2 to the borrower. Get a little bit of leeway above the 2 sometimes.
Yeah, it depends upon the situation. But again, you have to walk them through what's the return on investment on that.
Right.
Like
well, and I've told them, like, they're not going to end up being able to lock this. It's not, it doesn't.
Well, again, $300,000 purchase, 5 points is $15,000.
Mm-hmm.
That's absurd. If you're going to save $100 a month, how many months does it take to make up $15,000?
Mm-hmm.
A lot.
Yep.
And if we're in the rate environment we're in, and we're seeing right now that in the next 18 to 24 months you're going to refinance, you're going to lose 90% of that money.
Yeah, and that was the piece I was getting at when we bought last year was, as a loan officer, everybody wanted to do a buy down, but we weren't doing a buy down at all. And then sure enough, we refinanced for 0.5% less in August. We were just doing conventional 5% down, like, 690 credit. It wasn't anything amazing, but it was like, we had gotten a 0.5% down. And then we'll be refinancing again here soon. And those people also have refinanced, but they threw out those thousands of dollars. And we went through that during the process. But they said, this is my bottom line. This is the max monthly payment I'm okay with. If I waste the money, it's okay.
Yeah.
And that is 100% a buyer's choice to make. But I think it's important for them to know that that's the decision they're making. Because like your friend, like the girl that you just were able to help with her family, not every buyer knows that that is a decision that they're making. Right. It's being made for them. It's not being explained to them, and you get to choose what makes sense for me.
Yeah.
What did she end up doing?
She's on hold right now because I'm not sure if they want to move now. So they've talked about adding on to the house they have.
Okay, but if they move, they're probably not using that lender.
Yeah, it's wild. When you just look at different scenarios, and I think, again, when it comes time to do what you're doing, and we're talking about mistakes buyers make or could make, it may not be a mistake. Maybe they just don't know. Yeah. It could just be uneducated.
It's a lot of ignorance, not in the manner that means...
I didn't want to call it ignorance. That's why I said uneducated.
Well, it's not...
You're ignorant.
Ignorance is bliss. Ignorance does not always mean, stupidity. But not knowing. You were in the Marines, right? I'm very ignorant to an experience of a Marine. Why? Because I have never had an experience of a Marine. So I don't expect someone to be in the same spot as us or have the same knowledge of us as loan officers, because they're not doing our job. And that's the same with the realtors. I just say that's why these are our positions. Let us help you. Which Gary and I were talking about, like, if you feel like you're being forced along in the transaction, or you're going in blindly and you just feel unaware, or you feel ignorant to what's going on, right? That's why you have us ask questions, pull us in. And if you have a lender you're working with who's not doing that, then it's probably time to talk to someone local who would be a fit for you.
Yeah.
Have you had any, so we were talking earlier about pre-approval and the importance of pre-approval, but it comes down to buyers' mistakes. Have you had, tell me about a time if you had, a situation where a buyer used an online lender, went under contract or was about to go under contract, only to find out that this pre-approval wasn't reliable.
Yep.
And how did that unfold?
Yeah, and this is something Nick and I go over a lot. Just having to come in and save deals, right? Because you have a closing,
all the time.
you have a closing date set, and it could be a domino effect where they have to buy that house because the people that are selling the house have to buy their house that same day, and those people, it depends upon what's going on, right? So there has been times where we've had to step in and save deals, and a lot of times it's just the servicing, like you said earlier, where they just have not kept up with it. The processing side, underwriting side is not on top of the scenario and what's going on. They missed something. The initial loan officer who took the phone call and the application missed something. And all of a sudden, like, oh crap, do we even qualify anymore? Or is it something that can be saved and they're just not willing to do what it takes to save it?
Yeah.
And for us, our smaller company that we are, we have direct connection with our underwriters. If we can keep it within guidelines, we're going to make it happen.
Yeah, and our underwriters, what I can say from working other places locally, our underwriters are very client first. They want them to close just as much as we do.
Yeah.
And that doesn't exist everywhere. You don't feel like you're being met with adversity. You're just being met with an obstacle to conquer together. It's very, very team oriented. So with that, as people go through underwriting, and I've heard them say, I've had clients come and say, hey, they said we have an issue in underwriting. We need to get other opinions. This was our dream home. We can't get a hold of our loan officer now either. That's a big thing. I tell people, and that's where it comes into the mistakes. The mistake is also starting with someone who doesn't have a local reputation and it is reachable and you have their cell. And I don't mean they're going to pick up the phone at midnight. I mean, you can get a hold of them when you need them. That's one of the biggest mistakes, because I've seen these people go under contract and say the loan officer completely ghosted. I had one that just closed yesterday, and it was we got his file 3 weeks ago under contract. The loan officer just said, couldn't do it. He found him online, great rate, right? Couldn't do it. Couldn't pre-approve him anymore. File was being terminated. No reason why. They never got the denial letter, which would show why it was terminated.
Yeah.
And now they've already closed. They still don't have it. So that's another big piece. When your realtor is warning you not to work with someone, or to please work with someone they've used before, there's a reason for that. And I think that is the number one biggest mistake buyers make.
So back to where this started 14 minutes ago, don't go shopping without a real estate agent, right? So if you need somebody, let us know. We can refer you to somebody who's going to love you and take care of you and probably become a friend for life, a friend the next time you want to sell your house and buy again. That's probably one of the, if not the biggest mistake, I would say. And it doesn't have to do with us. It has to do with you and what you're doing out there. Is don't go out there unrepresented. Make sure you have somebody who's going to stick up for you and fight for you to get you the best deal and get the house you want.
Yeah, and that is, I would opt to say that's why we both work at Ideal too over other mortgage companies, is being able to go to bat for people the way that we want realtors to go to bat for you, title to go to bat for you, and anybody else.
Yeah.
Thanks for spending some time with us talking about buyers' mistakes early on.
Let's call it buyers uneducated. I don't like mistakes. Because it's not a mistake because they don't really know what they're doing.
What if they have a PhD? They're just not educated in mortgages.
Well,
We'll catch you next time. Have a great day.
Cheers, y'all.